What's going on, people? We're back with another trade breakdown. Today I want to share with you guys the trades that we took yesterday on the NASDAQ. So took 3 fantastic positions, 1 loss, 1 small win, and then 1 short, which turned out to be an incredible trade, which I didn't expect such a big move to happen in the London, but we will take it. And guess what? We traded the entire thing live in the community, sharing updates along every single way, and had people messaging me on Instagram saying they got stopped out on the indices before they moved in their favor. And that's because there was very key retail traps which I was aware of and that I traded and shared with everyone in the community. So we didn't have a 100% win rate. I don't win all of my trades. However, when I do win my trades, I let them run and they massively outweigh my losses. So let's jump straight on the charts and I'll break down these beautiful positions for you guys. All right, guys, so here on the charts now, looking at the NASDAQ, and this trade ran into a 1 to 8.7 risk reward, which is just absolutely phenomenal. It's very rare that we see such big moves in the London session, but today it played out very well. A lot of you guys ask me which sessions do I trade, and I personally trade 1 to 2 hours of the London, and then again, same again for the US session AM, which London time I trade around 12:30 till about 2:30. So we trade both sessions because both give incredible opportunities. And yesterday's move, the move happened in the London session and it was absolutely incredible. So let's jump over the first position and let's just rewind this back to where we were in, because I actually could have held this a little bit longer and I was unfortunate to close it out early, but you know, I stuck to the plan, and I'll explain to you guys why I took it, why I closed it early, and then why I took the short. So coming into the session, what we saw was price creating this double bottom right here. Okay, price was creating liquidity. We actually entered here. So price was creating this liquidity. And I said to everyone in the community is before it all happened, what I'm expecting is price to come down, take out these lows, retrace, and then come for a deeper push back down. So shared everything before, after, during, closed this trade around a 1.87, which isn't my normal risk reward, but it's still a great trade and we'll absolutely take it. What I noticed was price was creating this double bottom, and I knew before we're gonna have this push up and retest these levels, price is very likely gonna come out and take out this double bottom, create a triple bottom, even more liquidity before having that push back up. And then that's exactly what we did. So create that double bottom, took it out here, really nice strong push, came back down for the retest. That's then where I entered the long and was looking for this play up. And I actually shared in the community on the 1 minute time frame, there was an even nicer entry on the 1 minute where we had this beautiful left shoulder. Look at that. The head, which is the stop hunt, the retail trap. And then you come down for the retest. And that right there would have been an absolutely incredibly good and valid entry as well. It's just rare for me to go down to the 1 minute. I'm usually trading the 5 minute, but sometimes I'll go down to the 1 minute just to assess the price action. And in this scenario, I actually should have done that because I would have caught an absolute insane move. And this ran up to highs of a 1 to 10 before then shorting again back down for a 1 to 8. So it would have been over 18 risk reward yesterday, which is absolutely insane. But this is a very clean trade, as you guys can see here. We have that double bottom. We create it there. Lots of retail traders see that. They go long right there. Where do they put their stop? They put their stop just below that previous low. So what do we know sitting below here? Liquidity. Price pushes up, moves in their favor, bam, stops them out before then having that real move. So incredible long early on in the session. Now, the reason I closed my profits is because what I noticed is price was coming up into this resistance broke, support broke, coming back up where we could test this level and then roll over. So I thought, if we are going to roll over from here, then we're going to come down and take out these lows here. So why don't we just secure some profits and then let price tell us what it wants to do next. So beautiful position. I believe I entered somewhere around here and it would have then come down to get me at break even again. But there was actually even another beautiful entry right there. Look, broke that level with a strong push. Couldn't get involved anywhere on the retest, playing it back up to these highs up here. So unfortunately didn't catch that, but we took the long. And it was a really nice position. Now, let's just hide this one off. This is where 90% of retailers got stopped off on the wrong side yesterday. And I had many people messaging me on Instagram, fantastic short. I was too busy trading the S&P or US 30 and got stopped out. Now, this is just a very simple liquidity grab and retail trap. And this is why whenever you're trading the NASDAQ or whenever you're trading the S&P US 30, you want to be analyzing the other indices to see what the other one's going to do. Now, Okay, apologies guys there, we got interrupted with a phone call. So back to be where. What I was saying is, as you guys know, the way that I like to trade is I trade retail traps and liquidity grabs, where I wait for price to create some sort of liquidity, bring in retails, take that out, and then to have the real move. But if you guys look at this and look at the short position that we took, you may be thinking, well, why did I short there? When what I'm basically saying is I'm waiting for price to create a double top, create liquidity, to then come up, take it out before then having that real move. Why did I short here? Why was I not skeptical that this is a retail trap and this is what all retail traders are doing? And that's a very, very important, valid part of when you want to trade indices. If you're new to trading indices, this is very, very important. So what I was doing and what I always do is if I'm trading the NASDAQ, I'm always watching the S&P as well. You have to be flicking through both to understand if one's taken out a level, then the other one doesn't need to. So for example here, the NASDAQ could have left this double bottom and pushed higher if the S&P had taken it out. The S&P hadn't taken it out. I knew the NASDAQ was going to come and take it out. Therefore, the long still entry. Now, if we look at this huge pushback down on the S&P, as you guys can see, I've still got my levels. What did we do? Look at that. No coincidence. S&P took out the high. The NASDAQ doesn't need to. Any retail trader yesterday, and I had lots of you guys messaging me, and I hope this helps you, any retail trader goes short right here. They see this rejection. Where do they put their stops? They put their stops above the previous high. They get stopped out. I enter and it runs massively into profit. Now, that was an incredible short, but the most important thing to understand if you guys are maybe new to trade the NASDAQ or new to trading indices, you have to be watching both to understand which one the other is going to do. It's a massive, massive important part of the plan. Now, let's just say, for example, if the S&P hadn't taken out this high here, and the NASDAQ was doing this, would I be shorting here? Absolutely not. I wouldn't be shorting here until at least the NASDAQ's liquidated this high or the S&P's liquidated the high. And then once we do that, then, okay, cool, I can start looking for shorts. And that's exactly what we did. What I was watching was, I was watching price coming back into this very nice key level here, throwing really nice wick rejections here on the 5 minute. Again, this is just retail traps. Leaves a wick, we're going to come up and fill it in. We always do. You have to understand how these indices move. What I was doing, I was watching this live and telling everyone live, and this is exactly the same thing that happened to the lows. We take out the lows, we have to move up. We take out the highs, we have to move down. So what I was telling everyone in the community is, look, the S&P has taken out the highs. The NASDAQ does not need to. Therefore, this is a lovely level where we want to go short and we put our stop just above here. And this trade was absolutely phenomenal. I had a first target to come down and liquidate these lows here, but this thing just absolutely smashed all the way down and there was absolutely no reason to secure any partials until we came into my first major barrier, which is this massive level of resistance. We've broken, come back, tested the support. We could easily push higher. So there was no reason to want to secure profits any early when the 5 minute and 15 was just absolutely incredible. And then the hourly time frame, don't know where we're going here. And then the hourly time frame closed with a beautiful, beautiful wick rejection, strong body close, breaking all levels of support and just continued to roll over. However, if we look at the S&P on the hourly, look at that. It's no coincidence that we've taken out that high. We've grabbed the liquidity. We've stopped out all retail traders and then we've had the pushback down. And I haven't checked it because I don't really watch it that much. But if we take a look at US 30, I assume it did the exact same. And there it is. That's what everyone was complaining about yesterday. They got stopped out before price moved in this favor. And if this keeps happening to you, you need to understand and start learning liquidity grabs and retail traps, because this will save you not only so many losses, but it will help you snipe fantastic entries. And all of my trades this morning were based off very key levels of liquidity and retail traps, but very simple elements. Once you know what retail traders are doing and how you can trade it to your advantage, you can start banking fantastic positions like this. So ended up closing this at a 1 to 8 risk to reward. So there was so if we put on the long as well, long was a 1 to 2. This ran into a 1 to 8, so there's your funding challenge passed, and this ran up even higher, and there was even nice entries. This even ran up to a 1 to 5, so there's a potential 15 risk to reward. So learn the skills, learn how to trade properly, and stop wasting money blowing your challenges. If you got stopped out on the S&P or US 30 yesterday, it was nothing but a very simple retail trap, and that's how we traded this to the advantage. And as you guys can see, documented and shared the entire thing live with the community in the market chat. This is all our channels. This is the market chat where we kind of all talk and share ideas. And look what I said. S&P taking out the highs, very important. And then look at that, NASDAQ respecting that level. And then I just said to everyone, I'm short this mofo. And that's exactly where I then went short, stops above the highs. And then look at that. Incredible reaction. And look, the guys managed to catch the exact same positions, trading the elements along with me live. And that was the trades this morning. So an absolutely incredible morning trading the NASDAQ. Key takeaways: understand retail traps, understand liquidity grabs. Where do retails have their stop loss? How can you trade it to your advantage? Has the S&P taken out a high? Yes. Does the NASDAQ need to? No. Has the NASDAQ left a double top? Yes. Has the S&P? No, S&P's taken out. Perfect, you can trade the NASDAQ. Whenever you're wanting to trade US 30, NASDAQ or the S&P, you have to be correlating it between all of the other indices, and this will stop you from getting stopped out like this before price moves massively in your favor. And that was the only reason that I was able to catch the beautiful NASDAQ short and you got stopped out. I'm no market wizards. I don't predict the markets. I simply react to what I see. But I also understand the very important elements needed to trade indices. Indices can be very simple to trade if you know how and if you understand retail traps. So I will wrap this up here and I will let you guys go. But thank you very much for watching. If you did enjoy this video and you took away some key tips, please leave a like, subscribe, all of that good stuff, and I'll catch you all in the next one. Peace.